to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, episode 102, AJ Brown. How you feeling, AJ?
I'm feeling great. Sip. I had a great week.
A lot of progress. Great week for you, but maybe not so great of a week around the world because as we ended our show last week, I believe over the weekend, the tragic skirmishes started to come out of the Middle East in Israel and Palestine.
It's really mind-blowing.
Which I don't know if that necessarily had that much of an effect on the market, more so than it did on just sentiment. And then as of yesterday, we had some big CPI numbers come out that seemed to be a little bit out of the norm and move the market. So where do you want to begin, AJ? What are you seeing? What has been driving the market this week?
Well, first, I definitely have to say that what we've been seeing out of Israel and what we keep hearing, I mean, it is just mind-blowing that somebody can do that to somebody else. So it's yucky. As far as the market's concerned, it's almost like you can see that investors are putting their head in the sand. They're hoping that it comes and goes quickly. And so you didn't see much effect on Monday, Tuesday, and Wednesday. When something starts to settle in as a long-term thing, like we actually hoped that what happened between Russia and the Ukraine would have been fast. So you see these cycles. First, you see investors kind of in a wait and see mode, business as usual mode. Let's keep it in the background. Then you see investors take inventory of the potential ramifications monetarily wise on their different securities based on this skirmish. And then it goes back to business as usual. War is just going to be part of our everyday dialogue. So we're on that verge with this Hamas Israeli war that's happening. We're getting right past now the part where investors were putting their head in the sand, hoping it ended early. And now you're seeing investors starting to try to evaluate what the long-term or even middle-term effects of this war are going to have on their investments. So you're seeing a little bit of a pause, a little bit of increase in VIX. But that's sadly investors, by definition, investors are trying to take their money and have it work for them. So they have to be fairly black and white about the decisions they make with respect to growing money. So it's all about money with investors. You know, on the sideline, investors can definitely have emotions and feelings about, the human toll and the atrocities and all that. But when it comes to doing your job as an investor, it's about what's going to happen to my money.
And we'll cover that a little bit more in our trending topic. But let's dig into the inflation numbers, right? Because they seem to be out of the norm, and we had a little bit of pullback yesterday. Yes.
So let's start off with the beginning of the week. So in the beginning of the week, we started to see bond prices moderate. And at the same time, because bond prices had gone up, the Fed began to hint a different story than last week, which was, well, if bond prices are going up like this, maybe our job is done. Maybe the effects have just been starting to trickle in of all the activity we've done, and we don't need to worry about adjusting monetary policy in the shorter, even middle to long term. And you can see that when we pull up our sentiment. I'm looking at November 1st Remember last week it was over a third of the of investors were saying they're going to raise rates on November 1st. Now it's down to 10%. So, people investors don't think that the Fed is going to take action on November 1st. It's become very dovish. When you fast forward to the middle of December, which is the next meeting of the Fed, this is where folks are still believing that there's a possible chance of not only there's a small contingent growing of people who think the Fed may raise rates by 0.5%, not just 0.25%. But in November, it's almost, it's 9-1 that believe that the Fed's not going to do that based on the beginning of the week. But you're right. There was a report both on Wednesday. Not many people pay so much attention to the Producers Price Index, which is kind of the wholesale inflation that, they take reports of the amount of inflation that suppliers give to end retailers. If you take a look at those Producer Price Index numbers, it's a similar story, right? They came in a little bit higher than expected. So expected was 1.7%. We came in at 2.2%. If you look at the month to month, it's 0.3 and 0.5. So you would say, oh, there is still inflation in the supply chain. But when you start to factor out volatile components, and that's always food and energy is quite volatile. And even though food and energy prices are what we feel as consumers as the number one thing, it's just all up and down around the board. And so what the Fed likes to do and what economists like to do is they like to factor out the most volatile sectors, food and energy. When you start to factor those things out, you start to see that, hey, we actually are moderating our inflation. And when you factor out things like trade services, you can see that, we're almost right in line with what the Fed was wanting, 0.2%. That's like a 2.4% inflation rate. So when you start to dig into the reports, what you realize is we've got, a very volatile, some things out there that are messing with fuel prices and messing with energy prices. Now, coming up to that Consumer Price Index report that you've been referencing, you kind of see the same thing. So yeah, knee-jerk reaction investors have been looking at this 0.4 number compared to the 0.3 number they were expecting and saying, oh gosh, we're still in that 3.5%, even 4% range, and the Fed wants us to be at a 2% range. But then again, let's factor out food and energy, and you see we're kind of right in line with what we expect to be happening. So it always takes like a day or two for investors to dig into these reports. And so when we look at our charts, Sip, you can kind of see that, the initial knee-jerk reaction was maybe things aren't that good. We saw bond prices starting to rise again. Now people are starting to worry about this skirmish lasting longer and being more detrimental, that outside forces like Iran and the US might get involved. If Iran gets involved, people are worried about the price of oil. So that's kind of what we're seeing here. But the beginning of the week was quite nice, wasn't it? In fact, do you want me to go into some of the charts that I'm seeing?
Well, yeah. I mean, we going over specific names, or are we talking the VIX?
The S&P 500 and the VIX. Let's look at that. So I was using our new indicator that we've been giving people for free. If you haven't picked that up, you ought to go grab it. It's the latest revision is quite nice. We're getting good feedback about it. So we got our confirmation, as you can see here with this little green arrow hidden behind the low. We got our confirmation that low was a reversal. And so with that said, we've been going up ever since. Let's actually overlay our rulers. So we like our new indicator because it tells us where the reversals are. But now that we know where the reversals are, we can apply some of our rulers. So I have my rulers preset over here. There they are. So check this out. You see this purple zone that we're currently in? This purple zone, if we get a confirmed reversal down while we're in the purple zone, which is, you can see that's where we are as of October 11th, we're smack dab in this purple zone. That's actually going to confirm for us that we are in an ideal downtrend. People are saying, oh, we're moving up. Well, people who have, kind of the tools that we have actually are saying, yeah, that's an ideal retracement for a downtrend. So we should be ready for a downtrend. And sure enough, it's playing out there. We're just waiting for our confirmation signal to say that the high we reached on October 11th is the high of this latest move. And that would be called a range contraction that is in the ideal range. We had a range expansion from September 14 to October 3rd that was also ideal. So if you start getting these ideal moves, range expansion, range contraction, that are in the ideal range each time, more investors commit to and sign on and start trading the downtrend that's being defined. So if we stop right here, which it looks like we might, we're just waiting for a confirmation that we've stopped, we should be preparing for sell-offs. We should be preparing for more downturn moves. Now, if something happens over the next days and before getting a confirmation, we start moving back up and we wind up reversing somewhere in this red range, then it puts a change on investors and we start thinking about sideways, kind of stalling, things like that. So we are here at Trading Trainer, we're waiting to see, are we going to get a confirmation that October 11th high close was the highest we're going to see in the next month or two, or will we go higher before we get a confirmation that a reversal has been seen? Because that's going to tell us what to think about through the end of the year.
Yeah, and looking at this chart, it kind of validates the curiosity of Monday, Tuesday, when everybody's looking at the market and they're looking at the news and they're like, oh my God, there's a war happening, but the market is continuing to move up. And it could be these greater forces needing that pull up so that, you could take your short positions, which we'll go over a little bit more.
Right.
In more detail on exactly, how you're playing that. And it looks like you just pulled up the VIX. And what was the reaction to Monday? Which one of those bars is Monday? Probably
Monday
that green one, right?
Was this one right here. So the reaction to Monday was, of course, a banking holiday, but the markets were open, quiet. However, that's when investors started to move their money from bonds on kind of the dovish sentiment from the Fed and start bringing it back into the markets, kind of creating an optimism in the equities market. And so that, and at the same time in the options market, people started to say, we don't need as much risk saving investments, which are the options. So they started to sell them back, caused the VIX to drop a little bit. And we saw the VIX drop a little bit on these continuing days on Tuesday and Wednesday. But then with that CPI and with Israel starting to respond to what happened from the Hamas, the uncertainty is resuming. So that's what we're seeing here. The VIX is creating a nice situation for us premium sellers, right? When the VIX goes high, option prices go high. And if you're a premium person, if you're buying and selling options, it's telling you that maybe you should think about selling them, because that, whenever there's an increase in the number of buyers, you want to position yourself on the selling market, I would think.
Yeah, and we'll go over a few more strategies on that throughout the rest of the show. With that being said, I want to give everyone who's watching, listening for the first time, an opportunity to join AJ's daily workshop. He's got an awesome daily workshop where he breaks down some of these introductory options, premium selling strategies with some really solid examples. So if you're sitting on the sidelines or if you're curious about learning more, that is a great place to go get a first taste of what to expect as a member of Trading Trainer, getting a bit of an insight into AJ's strategy. Obviously, on the show, we'll go over a few more examples. We've got AJ's pick of the week. We've got our speed round. But we're going to go ahead and give you guys a chance to hop on over there and sign up for that. And we're going to take a short break, and we'll be back in a few seconds.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So we did discuss a little bit on the quote unquote war front. So I guess I have a few questions on that, at least with some of the people that I've been talking with this week. The first is this different than what was going on with Ukraine and Russia? Like, are we as a global society going to be seeing different ramifications? Is it closer to home? Is it more graphic? Is it more tied to oil? Like, is there going to be a different effect than what Russia and Ukraine has been in battle for what, almost 2 years now?
Yeah. And, I think there's always a component of, when it comes to Israel, that I think there's always a component of more involvement. These guys have always, in modern history, been the ones that are the underdogs that tend to be strong. And yeah, it's always interesting when it comes to Israel and the Arab world, and the skirmishes that have been going there. But it's a hotbed, right? It's constantly a play. People are more, I think, conflicted because Israel has gotten more of being just lately the bully versus the bullied. And that's kind of a stance that they've had to take, right? You can talk about this and debate this back and forth, but with respect to investors, yeah, they're worried about the big players that might get involved. With Russia invading the Ukraine, Russia really wasn't a big player in the world economies. They maybe had a influence with natural gas pipelines and stuff to Europe, which it seems like Europe has quickly pivoted. And even though their inflation is double and triple what the inflation is here in US, they're making quick decisions. They're pulling down regulations around nuclear. They're taking care of their problem. They're not as slow to move as maybe the US would be if they were in a similar situation. And Russia was never a big player economically in pretty much anything. They've got a really strong military. That's it. And they've got a lot of natural resources, but those really are concentrated on Europe. They're not quite like the manufacturing hub that China is. And they don't have one of the world's economy. They haven't developed one of the world's biggest commodities like oil, like the Middle East has. So one of the big things is everybody knows that Hamas wouldn't be anywhere. Hezbollah wouldn't be anywhere without Iran. So the question is will this war bring in Iran? And if that's the case, then global energy supplies could be at risk. At the same time, we got a report this week that the U.S. is, the biggest energy producer in the world now. The U.S., the Permian Basin, which was one of the original oil fields when we realized 100 years ago that oil was an important energy source. Permian Basin was one of the first places. And, in the 70s and 80s, it seemed like it was drying up, the 1970s, 1980s. And with the supply of oil coming out of the Middle East, it kind of was like left fallow until about 10 years ago with the power of fracking. They were able to go back to the Permian Basin. And even though like the easiest oil to get was no longer flowing the way that it had been, just with some fracking technology, which is relatively inexpensive, compared to like, for instance, a deep water oil rig or one of the oil rigs that would be put up in the Alaska fields. I mean, this is already a developed oil field in West Texas, and you add a little bit of fracking technology, and all of a sudden, the U.S. is one of the biggest producers or the biggest producer of oil. And the report that came out this week is the Permian Basin is pumping, man. And so maybe the reliance on the Middle East can be downplayed if we just are looking more at the U.S. bringing things back home.
Yeah, and that's kind of my initial thought is oil prices, Middle East. If oil prices go up, they're going to have this trickle down effect through all these other sectors.
It's a global market, man. So even though, and this is where a lot of people get confused, even though the U.S. is producing so much oil, the price is set by all the players. Norway is also a very huge producer. And so all these players go in, and then the bid and the ask is set from there. So if you have a big chunk from the Middle East, all of a sudden, be under suspect, it doesn't matter how much oil you produce here in the States, the price is going to be set.
And another question, a follow-up that I mentioned, I've had some discussions this week is, here, I'll go ahead and pull it up on the screen. How should one invest in war times? And some of the initial concepts that come to mind for me are gold, right? Usually when there's war, gold, people invest more in gold. The shift of money from one country to another, right? Maybe investment dollars from Israel come to the U.S. because we do have more the stability. So how would you guide somebody that's got some money that is concerned, and maybe there's ways to take advantage? I mean, we obviously don't ever want to say that, but we're talking about investing. Are there defense names that are going to continue to creep up? What is kind of your consensus on how an investor should approach who knows what's going to happen with the skirmish?
Well, you definitely could try to play the news headlines, and you definitely could try to do the speculative approach and say, maybe I should be investing in aerospace and defense. But I have to say that, or maybe putting money into safe havens like golds and precious metals and things like that. Or this might be a reason why you might think about things like crypto or things like that. But my knee-jerk reaction is have a process that works in wartime and in peace, and that it's the same process, and don't get caught up in the news headlines and the speculation, because then you're just kind of guessing. You may be right, but more likely you'll be wrong. And so one of the things I teach my program participants is an analysis method on the indexes, trickled down to the sectors, trickled down to our target underlying symbols. So every time you sit in front of the computer, a 5-minute analysis, understanding what has happened in the last trading session with respect to the broad markets. Then taking it the next level, the sectors that you have on your radar. And sometimes what we do is we look at our watch list of candidates that we really like to focus on, and reverse engineering and finding out what sectors they are, and really focusing our analysis every evening on just those sectors that encompass the candidates on our watch list. And you'll find out very quickly in just 10 minutes every evening at the beginning of your analysis what the heck is happening in the broad market, and which sectors that you're following are either in perfect lockstep with the broad market or opposite, and then just trade accordingly. And if you take that methodical process. You're not introducing new speculation. You're just doing the same thing you would do any other time and responding correctly to the moves that happen, right? And so that's kind of the approach I recommend, is just do the same process and make sure your process has the ability to adjust for anything that happens in the broad market economies in the worlds.
So essentially, what you're saying is, as a student or follower of the trading trainer methodology, whether we're in war, whether we're in peace, whether stocks go up, whether stocks go down, whether interest rates go up or down, your approach is kind of neutral to fight any of those variances and essentially consistently generate a return month over month.
Business as usual. In fact, it's been proven over and over through the last 200 years that the disciplined trader always wins. The one that pulls the emotions out and simply has a black and white trading plan. If this happens, I will respond this way with my investment strategies. And so discipline, as much as your heartstrings get pulled, as much as you want to follow the news media into investing in oil companies or selling off oil companies, investing in defense companies, selling off, putting your money into your mattress or putting your money into golds. It turns out that so long as your process can accommodate for changes in the sectors, changes in the broad markets, and give you the forward guidance. Like, for instance, so many people over the last week thought that the market was hitting a bottom and that they should start going long again. Whereas with our analysis methods, it simply says, no, what we're actually seeing is a recharging so that people can sell even more. We're seeing a little bit of the market movers trying to create enough of excitement in buyers so that they can start selling again and basically move money from your pockets into theirs. So you have to just have your process, and you have to be able to understand actually what's happening and then respond.
And so earlier in the show, we did show a chart of the VIX, and options theory in strategy is essentially the insurance contracts. We've talked about it multiple times, where an option functions as an insurance contract. And when war is around the corner, I would imagine that there's more insurance contracts that need to be produced. And so now is a great time to start to get into the business of options trading, options investing. And so
options selling.
Let's dig into an example. Let's go over a process with your pick of the week. And this is one that we've discussed a few times. I would call this one a pandemic darling, and that is Zoom Video Communications, ticker symbol ZM. AJ, what's the play you're seeing in Zoom?
Well, I am looking for Zoom to tell me that it has bottomed. So take a look at this chart. Now, I want to emphasize something. We had Serge on about 3 episodes ago. He's just a great peer of mine, and he said something that I have been echoing in my workshops with my program participants, which is make sure you're not just trying to trade a chart. And I actually have been emphasizing that in some of my, I like to work with my program participants. I'll call them and we'll work over charts. We'll do some coaching sessions over that. And whenever a program participant gets into the focus of just looking at the chart and they can't answer my basic questions about the company and what's happening around that chart, the sector, I kind of give them a ding. I'm like, you're falling into the habit of thinking that the chart dictates it all. So on this show, I want to emphasize that we've looked at Zoom, the company. We've looked at Zoom using, we give everybody in our program kind of a checkbox where you've looked at analyst estimates, you've looked at news headlines, you've looked at the company description, you've looked at insider trading, things like that. And so we've actually done all that behind the scenes before we even think about looking at the chart. We've created for ourselves a visual avatar of what the investor is. In fact, we're using AI now more than ever, where we'll describe to something like Midjourney what our avatar for who would be the typical investor drawn to Zoom. And Midjourney takes our thoughts that we've prompted it with, and it draws these amazingly lifelike pictures for us that we can then have in our mind. So every time we're thinking of trading Zoom one way or another, we can picture the other person on the computer who would be either creating the buying or selling signals for us, right? Because what we do is we ride on the coattails of these investors, right? So with that said, we're waiting to see that Zoom investors find that Zoom has bottomed and start buying. If I go back over, say, a 1-year chart on Zoom, you can see that Zoom has been in this sideways range between about $62 and $72, something like that. If I come back now to about a 6-month chart, we're coming down to that lowest range, which in the past has caused some buying. And so this is getting ready for us to have that opportunity to get in at the lowest price possible for Zoom. So we would think about SIP buying the stock, which in this case, Zoom's a little bit on the expensive side. So, and when we're talking about option strategies, we do need to buy these in increments of 100 shares. So, you're talking about one increment of 100 shares costing about $6,200. But one of the other things that we like to do here is use a substitute option. Now, beginning option traders often make a mistake in that they think any call option could work as a substitute option. And sadly, they'll buy some call options and then it won't behave the way that stock does. In other words, the stock price goes up in price and their option that they chose goes sideways or even goes down, and they can't understand why that's happening. And that's because calls don't all act the same. A near term at the money call will not act the same as a 6-month out of the money, or a more than 8-month out, deep, very deep in the money option. So if we're going to want to substitute Zoom stock with an option, you almost want to go out even as far as like May or June of next year for your expiration date. So let's look at May, and then you're going to wind up going actually pretty deep in the money, like this 35 or this 40 strike price call. And you can see here at the bid and the ask that the market makers are actually in there, and you could probably get a very good price. There's liquidity. They're ready to trade with you. So you don't have to worry so much about, if I place an order for this option, will my order actually get filled, or will there be no sellers? It totally looks like they're ready to do business with you. And so, I could pay $62.40 a share for the stock, or for less than half price, I could buy this option. And this particular option, far out in time, deep in the money, will behave like the stock. So I could see myself buying some of these 40 May 2024 call options when I get the signal. That a bottom has been found. And that might be a great thing to do.
All right, so that's the setup for Zoom. Keeping an eye on it. Maybe we'll just make a note to. When do you think that signal would come in? What, the next week or two, or you don't even know? It could just fall.
I
through the
don't know. In
cracks.
fact, one thing I see also is that people don't back test and forward test their signals. So, and they oversimplify their signals. They'll be like, I'm just going to trade on a moving average crossing. And as you can see here, this is a filtered moving average crossing. And you can see that within a day, it was reversed. One of the things I teach my folks to do is have a primary signal, whatever it is you choose. And usually that's verified through back testing, where we have the the hindsight. We can tell where the tops and bottoms were because we can see them. Whereas in real-time trading or paper trading, you never really know you've seen a bottom or a top until it's a few days behind you. So you use back testing to determine what your primary indicator is. But when you get your primary indicator, don't stop there. Look for validating indicators. And on the day that you want to place the trade, make sure everything is going in the direction you suspect. So when we got this signal that a bottom had been found on September 29th, and we usually get our signals end of day, so been the evening after the market closed. So we came in on October 2nd, which was the Monday this past week, 2 weeks ago, and we realized that things were not going our way on October 2nd. So we didn't place the trade. And we said, we'll try again tomorrow. On October 3rd, we looked at it, and we during the trading day of October 3rd, we realized that still things were not going our way. That bottom signal from the primary indicator on September 29th wasn't actually panning out. On the evening of October 3rd, we got a reversal signal saying, okay, psych, I wouldn't try to place this trade right now because I think I'm going to go a little bit lower. So I urge folks who are trading indicators to have a primary indicator, but then also use validation and day of trading follow through. Make sure all the stars are aligned before you actually transact.
All wonderful tips that everyone should certainly take to heart and use week to week as you're looking for winners. So that's AJ's pick of the week, ticker symbol ZM, Zoom Video Communications.
We'll check in on it next week, maybe.
We'll keep an eye on that. All right. We've got another name that we should be checking up on. And this is, we'll just jump straight into our speed round. Every week we've got some users from across the country that want AJ's take on some names. And we'll just start with a follow-up from last week. This is Ann in Dallas, Texas. She wants to know, AJ, did we make a move, or are we adjusting our strategy with American Airlines, ticker symbol AAL?
So, Ann, I don't know if you just caught my whole thing about Goodyear Tire, but same thing happened here, didn't it? So we got our signal that it was time to do some buying on Goodyear Tire, and
Zoom.
also, American Airlines, that this was when we should be getting into this trade. Or if we've gotten into this trade, this is when we should be liquidating our protective puts, perhaps even buying to close our written calls. The next day, when we wanted to do those transactions, we actually didn't get any follow through, did we? You can see here, and I'm talking about basic things like, for instance, when you get into there to do the trading, which is usually in the afternoon or professional hour sessions. We don't like to trade in the morning. We especially don't like to trade in amateur hour because there's usually a lot of economic news. There's usually reports that causes some increased volatility. So we always recommend that folks, when they're ready to do some regular transactions, that you wait until the afternoon session or even professional hour when your market movers are trying to settle their accounts for the day. You can really glean what they've been thinking all day when they have to settle their account. The scoop is by that afternoon session, we weren't trading above yesterday's close. We weren't trading above the day's open range, the high established in the first half hour. So those are complete signals that say, hey, even though we got a signal at the end of the day that a bottom had been found, the follow through isn't there today. So we didn't get that. We didn't get a signal on the trading day to actually do the transaction. So we tried again. We came back at the end of the day. We said, well, the signal is still there. It hasn't been reversed. Let's try again tomorrow. Well, tomorrow we definitely weren't trading higher than the previous day close. And by the end of the day, again, no transaction. And at the end of the day, we actually got a reversal on that signal. So, Ann, The answer is American Airlines looks like it's going for an even lower low. And we have to question ourselves because American Airlines almost looks like it's been downtrending. So we have to question ourselves as to whether, a bottom being found here is actually going to be the end of the downtrending, and might be a place where we do want to go long, or whether we need to think about it differently. This isn't a mature sideways channel yet. So I'm a little bit worried about suggesting that even when we do get a signal with validation and with day of trading follow through, that we should act on it. I almost feel like, and that first of all, we should get past this earnings, find out what's going on with the company, but also that we should wait until our pattern matures. So see at least 2 tests of a level of support, 2 tests of a level of resistance, and then we might consider becoming option sellers against American Airlines. In the meantime, there's other candidates out there that already are in the patterns that we're looking for. So maybe this can be something we check in on a weekly basis with, rather than focusing on it as a candidate that we're just on the edge of our seat trying to trade, and go with one of the lower hanging fruits.
Yeah, and we mentioned that this is a common airline trend right now, and I can only imagine that the potential oil fluctuations got to have something, got to have an effect on these airline names. But if they do turn the ship, it does look like there's some bottom potential there. So definitely check on it week to week. So thanks for bringing that one up, Ann. Moving on to our next name. You mentioned it by accident, I think. And this is Gary from Indiana, interested in Goodyear Tire, ticker symbol GT. Sounds like a really boring company there, AJ.
Isn't Gary outside of Chicago?
It is, but the notes, I didn't have a name, so I just assumed Gary from Indiana, but it could be someone from Gary, Indiana.
Yeah, I think his name was Terrence. I guess I messed up. So Terrence but I want to say I remember Gary being in the news, and I can't remember when, maybe a decade ago. Didn't they have a problem, like their trash union decided to stop picking up trash at one point, and the everybody's trash was piling up on the curb?
I think you might be right there, but the city in itself has been deteriorating for, I don't know, the last 40 years.
Rust Belt, right?
Yeah. But the business of Goodyear Tire.
So thanks for keeping us on track. Hey, we did get a buy signal here. What I worry about, so first of all, let's talk about the pros. Terrence, Goodyear makes, they've been around for forever. They are a company that creates a product that everybody needs, right? Tires. So those are some good things. I've noticed that Goodyear hasn't been making money recently, and that might be something to delve into. Like, have they purchased or have they merged and acquired with companies that didn't pan out? Are they not staying competitive against Michelin, BF Goodrich, and all the smaller companies that maybe have figured out how to be more commodity? When I go to Costco to replace the tires on my car, the Goodyear tires don't seem to appeal to me. I wind up going with a Michelin or something. So what's driving this? I like the price. It makes it quite affordable. I like that the options, if you take a look over at the options, they're trading every dollar, which means that this is going to be a great one to do option strategies on. And let's come back here. We'll look at, for instance, a option, maybe the January option. And you can see that there is some trading, especially around the at the money. As we get deeper in the money, maybe a little bit less, but there is people trading these options. So these are all pros. Some of the cons is that Goodyear is not, finding highs and lows. There's not accumulation and distribution. So you can picture here a frustrated investor who's not getting paid a dividend, who wants to see some appreciation, wants to see some movement in Goodyear, not getting it. And so they're at a moment of perhaps, should I sell my holdings in Goodyear and move on to something else? And that's never a good place for us to be when we're trying to trade this one way or another. What we could trade perhaps is a volatility play on Goodyear. So even though I got this signal that maybe I should be buying and setting up a premium selling trade, I almost argue that this signal is going to mislead you because there's so much consolidation in Goodyear. Coming back to this thing that I tell my program participants to do the research on the company and then create for yourself a mental image of the actual investor. And that way you can get better into their mind about what are they thinking about Goodyear right now and what do they think their next steps are. I don't feel quite positive for you to tell you that we should be setting up a premium selling trade on Goodyear Tire. Again, I think there's lower hanging fruits out there. Some of the bones behind Goodyear are there, but I would need to see a tradable pattern. So let's, again, put it on our watch list, something that we check in with even as infrequently as monthly, and let's see if a pattern develops. But right now, let's find something else.
Yeah, and it looks like there was something with those earnings there, the earnings day that pulled,
right
pulled
here.
the name back. Yeah. All right, Terrence or Gary in Indiana, or Terrence and Gary. Thank you for the inquiry. We usually love to cover boring names because there's an opportunity, but this one is one that we're gonna have to steer clear of for some time and keep an eye on. Moving on to our third and final name in our speed round, and this is Tom from Nashville, Tennessee, interested in a name I'm surprised it's still even around, and that's Snapchat, ticker symbol SNAP. You know, the darling social media company is still in the game, I guess.
It's been playing, and it actually, SIP, has turned into a very good premium selling. You know, they have figured it out where they're not just bleeding money. They have found that zone where they are actually viable. And there are some like people who are committed to being Snapchat users. I know that there's still some folks out there who rely on the platform, and I think that's keeping this company going. And hopefully, and I don't know if Snapchat's listening, but hopefully you've got some things going on behind the scenes where you can innovate and reinvent yourself and perhaps, have a resurgence. I think Snap was the one who made the critical mistake that like Groupon made and all of that, where you had an opportunity to be acquired when you were the unique player on the market. Instead, you decided you had some sort of advantage and realized that there's a lot of programmers out there, and all they did was basically recreate what you guys had as your special sauce. So sometimes, from a business perspective, and again, I'm hoping Snap listens to me. Sometimes you realize that your special sauce is a better, exit strategy for you. Just on a sideline note, we saw another IPO this week, didn't we?
I didn't catch
Birkenstock.
that. Oh, right.
Oh, yeah. So now we've had what? ARM. They're a chip manufacturer that is possibly going to be a player in the AI world. They could be. So there's ARM. Then we had Instacart. And now we've got Birkenstock. These IPOs are quite notable because they're releasing or going public at a time when it's not really an IPO market, right? When bonds are high and stuff, IPOs the spigot tends to shut off. So it's interesting. And one thing that comes to mind is that when you go IPO, you're actually preparing yourself to be acquired. So you almost wonder if Birkenstock's looking to be acquired by like a Nike or something like that. You're wondering if the ARM is looking to be acquired by like an NVIDIA or something. and Instacart, I'm not sure, but something to think about when it comes to companies like Snap. Okay, so let's come back and let's help Tom out here. Snap, I actually think it is a good premium opportunity here. We did get a signal a couple days ago. I think I'd have to look at the intraday chart. I'm going to look at the intraday chart to see if that signal got follow through. So we got our signal. I'm going to bounce around here a little bit. On our daily chart, we got a signal on the evening of October 10th. So we'll come over here and again, look at what happened on October 11th. So October 11th would be right here. So some of the basics we would want to make sure is, number one, we're trading above yesterday's close. So if I take a look over here and we look at yesterday's close, we would want to make sure we're trading above yesterday's close. The other thing we like to do is we like to make sure we're trading above today's open range, and that would be established right there. So what I usually recommend to my traders is that, first of all, you wait until the afternoon or even professional hours. So the afternoon session starts at about 12:45 New York time. So that means we would only be trading anytime after that time zone, right? And sometimes, depending on what the schedule of events are, either for that stock or for the market in general, we recommend not trading until the last hour. So that would be our professional hour. That would be here. Actually, I'm looking at a 15-minute chart. So that would be from there on, right? So in either case, if we would have done that, you can see that right during professional hour, we started to trade above our price thresholds. And so, yeah, I could see that we would have opened up a position on Snap. That means we would have either bought the stock, bought a back month deep in the money call option, or if we were already in this trade, we would have been selling our protective puts. We would have been buying to close our written calls if they hadn't already expired, and going forward. Now let's check out what has happened since. So we've kind of maybe hit, and we might be doing a double bottom. In this case, it looks like we might even be doing a triple bottom. But yeah, I think that this has been a good opportunity to maybe get a small position on Snap that we can then later sell premium on. I know that some people wonder exactly, what am I doing? Am I selling credit spreads? You know my thoughts on credit spreads, SIP. They come with a lot of risk, and credit spreads are actually, there's a lot of different kinds of credit spreads. But when people usually ask me about it, they're talking about vertical credit spreads. And also, my folks like to put all their trades into retirement accounts, right? And so you can't do credit spreads in retirement accounts because you need a margin account, and retirement accounts are cash accounts. So what we're doing is we're legging into diagonal debit spreads. We're legging into covered call, covered put positions. And so this looks like it might be a good opportunity for starting to leg into either a covered call position or a diagonal bull call debit spread. So yeah, I think that you're on to something. And if you got in a couple days ago, that's great. If you didn't, let's see if there's some opportunities going into the new week. And let's just be aware of October 24, because Snap's going to give us another glimpse into their earnings. And it does look like Snap investors respond to earnings. Just looking at the response here of the sell-off after the July 25 earnings, be aware of that.
All right, Snapchat, a lot to like there. Specifically, it's good price. It seems to follow the potential premium selling model. And so, Tom, thanks for bringing that one up. We'll keep an eye on it. That was our last pick of the week. I do want to give everybody an opportunity. If you've been seeing that little, the little arrows on AJ's chart, the green and the red in terms of his custom indicator that is available to everybody. So I just went ahead and put the link to that in the chat. So head on over to the Trading Trader web portal, sign up. You'll get access to that indicator, but you'll also get access to a ton of other stuff. If you haven't already signed up, it's a really good resource for upping and improving your options trading game. All right. Looks like we're starting to get to the end of our show here, AJ. The market seems to be pulling back here heading into the week. We did have some earnings today. Anything we should be keeping an eye on, weary of as we head into the weekend, as we head into next week?
I think coming on back to the broad market, I think we should pay attention to, not get so excited whenever there's a bull move, but pay attention to like our retracement analysis. We're right now watching this level of 4,400. If we wind up closing above 4,400 with a reversal, that's a game changer. But if we're going to start going down and we get our reversal where it currently is, it's at 4,361 on the S&P 500. If that's where the top reversal is going to be, subscribe to the fact that the market's going down. I talked to one person this week, Sip, who's just programmed to trade up markets, even with premium selling. He only feels comfortable setting up the initial trade being a long stock or a long call option, a long substitute call option. And he's not comfortable shorting the stock and or a long put option, a substitute put option. And it's a mindset thing. But right now, especially if we get this confirmation, if we get our top reversal below 4,400 on the S&P, you need to be thinking about trades where the initial covering position is going to be biasing a bear market. And so that's what I would be keeping your mindset on. We actually had one of our program participants yesterday give us a whole bunch of candidates to review where she found that they were getting ready to set us up for trades in the down market. And I think that that is stellar. That's having your head screwed on right. Don't try to buck the tides.
You want to ride those curtails.
You definitely do.
All right. Looks like we've got a lot of good names that we covered today. Got some good links in the chat. Once again, if that's something that you're interested in checking out, AJ's workshop, we got the link in there. AJ's awesome new indicator. We've also got the link in there. And as always, if you've enjoyed the broadcast, wherever you're watching, we'd love to see you subscribe. Hit that like, hit that follow, hit that subscribe button, hit the reshare. We do appreciate it. Episode 102. We have been doing this for quite some time. A lot of names, a lot of opportunities that have been discussed, a lot of questions that have been answered, but I don't see us stopping anytime soon. So if you have a question or a specific request of some sort, feel free to leave it in the comments, send us a message, send us a DM, and someone will get back to you as soon as possible. AJ, any big weekend plans?
I just got back, and this is a testament to the way that we invest. We invest following a set process, and it minimizes our time involvement. It's really interesting how people associate trading with something that can be a time sink. And most investors know that it's about figuring out how to make your money work for you. And that usually means investing smart and investing efficiently, but it's not a correlation. Like, people are so programmed that I'm going to work 40 hours a week for an employer, and that employer is going to give me an hourly wage, give me a salary. I'm trading my time for money. When you're an investor, it's not about your time. It's about figuring out how to parlay your dollars to make more dollars. And so I've got it down, and this is what I teach my program participants is it's not a function of how much of your time commit to it. You want to figure out how to minimize the amount of time and free up your days to do your passions, your responsibilities. We have a lot of like moms that, trade and also take care of families. We have, and I say moms, but we also have stay-at-home dads, and that's more common these days. We have people who are pursuing passions, things that they, off of their bucket list. And we have people who are just so career focused, like doctors and architects and lawyers, that they love what they do, but they also want to see their nest eggs growing. And so they want their time for this purpose, but they want their nest eggs for the monetary piece, and they've decoupled that. And so I always see like beginning traders thinking that they can trade their time and make their portfolio work harder, and that's not the case. And I'm just saying, I spent the last week pursuing one of my passions, which is building sciences. I love talking to people about making their homes and their buildings more durable, more energy efficient, more global warming proof. How do I make a home that's going to survive wildfires on the West Coast, survive floods and hurricanes on the East Coast? And so I spent my whole week doing that. I was at a symposium in Charlotte, North Carolina, and I just feel so full. And all I had to do was come back to my hotel room in the evening and spend a half an hour managing my portfolio. And my portfolio is just kicking it, right? But then I could spend the days talking about one of my passions with leading experts. I mean, I don't know if you guys have ever heard of the show This Old House, that's been around for decades, but I got to hang out with some of the key people from the This Old House show. I felt like I was starstruck. So for you new investors in there that might be tuning in, first of all, if you've been tuning in for a while and you're not subscribed, do us a solid and just hit that button, subscribe. But kind of reprogram yourself and say, how can I get like stellar returns off of my investment portfolio through trading options, trading stocks, but also get the benefit of freeing up my time to do what I want to do.
And I think with that, we'll go ahead and close the show out. Great advice. Create a winning portfolio strategy for yourself so that you can live your life to the fullest and chase your passions and be more fulfilled in life. So with that,
that's what it's all about, dude.
We'll go ahead and close things out. As always, if you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button, and we'll catch you guys next week. Adios, everybody.
Bye-bye.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.